Good morning. Today is Monday, September 20th, and we had a wonderful time last week at our client appreciation event. Thank you to all of you who participated. The recording of the event is now on our website. So if you're not able to attend, or if you want to watch it again, you can go to the events page on our website to view it. You'll also be able to download Tony's recipe cards for his margaritas, guacamole, and his Noritas. So go check that out if you'd like to do that. It is on the website ready for you. Looking forward at this week on Thursday, I'll be talking Social Security for boomers. If you are over the age of 55 and have not yet taken Social Security, well, then I invite you to join me. The Social Security decisions that you make can have a tremendous impact on the total amount of benefits that you stand to receive over your lifetime. This event will be broadcast online, and you can get all the details at the events page on our website. So last week, despite signs of a good economy, stocks had a lackluster week. Today, the markets have opened solidly in the red here this morning. Nothing unexpected, but we are keeping a close eye on things. So with that, I'm going to play the intro, and then I will go into more detail into what happened last week. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. So stocks weakened ahead of this week's Federal Reserve meeting and amid persistent concerns about the Delta variant's impact on the economy. The Dow Jones Industrials Average was flat, down just 0.07%, while the Standard & Poor's 500 fell 0.57%. The NASDAQ Composite Index lost 0.47% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, dropped 0.65%. So despite a string of economic reports painting a healthy picture of the U.S. economy, investor sentiment remained cautious. While tamer inflation and higher than expected retail sales may typically be constructive for the market, any investor enthusiasm it generated was fleeting. The market appeared all week to be encumbered by a tentative, apprehensive mood. The Delta variant remained an overhang, but it was more than that. Investors appeared concerned about September, which historically has been a weak month for stock prices. The market also was concerned about fiscal and tax policy proposals emanating from Washington, D.C., news of an economic slowdown in China, and by what the Fed may announce following its September 21st and 22nd, the next 2 days, Federal Open Market Committee meetings. A series of economic reports released last week provided investors with a broad snapshot of the state of the economic recovery. Inflation showed signs of moderating, rising 0.3%, an elevated rate, but well below June and July's increases of 0.9% and 0.5%, respectively. The consumer remained strong as retail sales rose 0.7%, which was an unexpected jump. Manufacturing reached pre-pandemic levels, while the labor market continued its recovery, with initial jobless claims coming in near pandemic lows and continuing claims hitting a new pandemic low. If you are feeling a little bit confused about the direction of inflation, you're in good company. Some of the best and brightest economists in the country are having a tough time getting their arms around the current inflation trends. The most recent producer price index reading came in above economists' estimate at a record level of 8.3% compared with a year ago. Producer prices can be an indicator of future price changes at the consumer level. One way to gauge inflation is to watch the people responsible for managing inflation, the Federal Reserve's Board of Governors. In recent weeks, several governors have indicated they're comfortable with how the economy is recovering. So comfortable that they appear ready to slightly change course with monetary policy in the next few months. Does that mean inflation will be lower in 6 to 9 months? Well, time will tell, but keeping an eye on the Fed's actions may be one of the best ways to see what's next for prices. Remember, inflation is just one factor to consider when making adjustments to your portfolio. But if you're getting uncomfortable, please reach out. We welcome the chance to speak with you if you see higher prices. All right, remember, later on today, I will be sending out our full weekly economic update. If you're not getting this and you would like it, you can subscribe at our website. In this update is also our financial tip of the week, quote of the week, companies reporting earnings, a riddle for you, and some other items in there as well. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.